Welcome to Bears in Exile. Today is August 22nd, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, SLV, and a few other things. Here we are with the Dow. We have an inverse hammer, and it is green, barely. Some would say, oh, this is a reversal candle. I really don't see it as a real good reversal candle. Because you had some good up, but it was beaten back down. Short-term moving average is still sloping down until we have an uptick. There's no real reason for it to reverse. We have a mixed bag with secondaries. Histogram, MACD clicking down, RSI up. Every stochastic down, RSI 14-day moving average down, CCI a little bit up. And on the 60-minute, maybe you have a slight divergence in the CCI and a slight divergence setting up in the MACD histogram, but really not much to work with on the 60-minute. This is still ugly. It's back down below the bearish bar. It's short-term moving averages sloping down. Not attractive. And if we look at DIA, the Dow ETF, get a very different picture, and it is the same thing. It was in danger of getting a bearish engulfing, but it did not. But you can see that this is just a big red candle, and the short-term moving average is all sloping down. It's ugly. So if you look at this, besides just the Dow, it helps give a clearer picture, and it's not pretty. SPY, more of the same thing. Inverse hammer, actually more like a dragonfly. Maybe if the body was a little bit bigger, it could be a gravestone or something. But secondaries all the same. They look bad. Short-term moving averages look bad. If we look at SPY, just to get a different perspective, it's a big red candle, and it's almost bearish engulfing. And the short-term moving averages look bad, and the secondaries are mixed, mostly bad, although the RSI and the CCI ticked up just a little bit. We don't have an uptick, and it just looks ugly. On the VIX, we have a big green candle. Short-term moving averages are looking good. They are uniform. We don't have too much in the way of excessive separation. We have a little bit of a tail at the top, but it's not major. And secondaries are all clicking up, once again with the exception of the CCI and the RSI. So really the big thing is, here's the SPX, is the floor. Everyone's waiting to see if we bounce or if we go through it. And the Dow too have a little floor, and everyone's waiting, and it just does not look good for holding. Maybe it will with Jackson Hole coming up, but if Jackson Hole is a disappointment, this is done, this is gone. But we'll see. TNA. Almost bearish engulfing. We did make a new low. This shadow has been exceeded by another shadow, but everything is ticking down once again, exception of the RSI, exception of the CCI, and although we did get a slight uptick in the histogram, I guess that's something. But the most important thing being the short-term moving averages, no uptick, sloping down. Fairly uniform, and not perfect. We didn't get this bubble correction, but it does not look good for the bulls. UUP, bullish engulfing. We do have an uptick. Uptick is barely higher. It can be met intraday, no problem whatsoever. However, the middle Bollinger Band line is still above the short-term moving averages. Whether or not this is going to turn or not is anybody's guess, but secondaries, for the most part, all ticking up with the sideways on RSI. if this is going up for a bar retest right now, which it may. Strong dollar, is that good for equities? Probably not. FXE, bearish engulfing, mixed on the short-term moving averages, and everything clicking down with the exception of the RSI getting a side tick. If the euro is going to be going down, also not good for equities. So that would seem to reinforce our view with the VIX and our view with the short-term moving averages on the Dow, on the SPX, on DIA, on SPY. Now gold, our second VIX, big green candle. It is touching once again upper Bollinger Band. Of course, all the moving averages pointing up, all the secondaries clicking up. Now if the dollar goes up, maybe that'll be a bit of a hindrance for gold. We'll have to wait and see, but everyone is buying hand over fist out of fear. SLV, ooh, green candle above the upper Bollinger Band, everything clicking up with the exception of the RSI moving average and the RSI itself. Being above the upper Bollinger Band is not a good thing, but we'll see if it can continue to do it for our next couple of days. It is a bullish candle, but and the short-term moving averages look nice, but there is already a little bit of excessive separation. We'll see if it does a sideways tick to get outside of the Bollinger Band and to fix some of this separation. Now, what I really do not like about today's action, and one of the reasons why I don't think that the floor is going to hold, is I'm just going to click through a few symbols and see what they look like. Bank of America, bearish engulfing. Best Buy, not a bearish engulfing, not attractive by any means. Boyd, which is Las Vegas, bearish engulfing. Citibank, bearish engulfing. CNO Insurance, bearish engulfing. Let's see, Cree Lighting, bearish engulfing. Cisco, not bearish engulfing. Looks like it could be a failed retest of the bar, but we'll have to see. GE, almost a bearish engulfing. Short-term moving averages look poor. GNW, more insurance, bearish engulfing. Herbalife. Okay, spinning top, not bearish engulfing. What is this? IWM, almost bearish engulfing, which is essentially TNA by a higher price and a different name. Las Vegas Sands, almost bearish engulfing. MGM, Vegas, bearish engulfing. What else do we have? NVIDIA, spinning top. Riverbed, bearish engulfing. SGI, oh, wow. Actually, that didn't do too bad today. Wells Fargo, bearish engulfing. Win, bearish engulfing. Ugly, XLF, bearish engulfing. So to me, oops. But anyway, that's my quick take of the market, things that I watch, and it doesn't look pretty. So I don't think that the floors here are going to hold, especially if Jackson Hole is a disappointment. And there you have it. That is what it is. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.